Have you ever thought about investing in real estate? It's an intriguing proposition, isn't it? It's no secret that real estate has been a cornerstone of wealth creation for centuries. Its appeal lies in its tangible nature, its resilience, and its potential for lucrative returns. When we talk about real estate investing, we're not just talking about buying a home. We're talking about acquiring assets that can provide a steady stream of income, offer long-term financial security, and potentially yield significant appreciation over time. And let's not overlook the tax advantages that often come with owning real estate, which can further enhance your returns. Whether you're looking to diversify your investment portfolio, generate passive income, or build long-term wealth, real estate investing offers a wide range of opportunities that can be tailored to your financial goals and risk tolerance. Now that you understand the potential benefits, you might wonder, how do you get started with real estate investing? So, how does one dive into the world of real estate investing? Well, the first step is often the most daunting: research. Understanding the market you're entering is crucial. This includes everything from local housing prices, rental rates, and property taxes to broader economic trends. Having a clear financial plan is equally important. You need to account for not only the initial purchase price, but also ongoing expenses like maintenance, insurance, and potential property management fees. And let's not forget about the unexpected costs that can crop up, such as emergency repairs. Now, you're not in this alone. Real estate agents, lawyers, and property managers can provide invaluable assistance. Agents can help you find potential investment properties, lawyers can ensure all transactions are legal and above board, and property managers can handle the day-to-day operations of your rental properties. But remember, not all properties are the same, so what types of properties can you invest in? When it comes to real estate, there's a wide variety of property types to invest in. First, let's talk about residential properties. These are homes where people live, like single-family houses, townhouses, condos, and multifamily houses. The advantage of investing in residential properties is that it is relatively easy to understand because most of us have lived in some form of residential property. The downside? Well, residential properties can be susceptible to market fluctuations. Next up, commercial properties. This category includes office buildings, retail spaces, and shopping centers. The advantage here is that commercial properties often yield higher returns than residential properties. They also often have long-term leases, which can provide a steady income. But on the flip side, these properties can be more complex to manage and require a larger initial investment. Finally, we have industrial properties. Think warehouses, factories, and distribution centers. These properties can be quite profitable, especially in today's e-commerce-driven world. The downside? Industrial properties require a lot of maintenance, and finding tenants can sometimes be challenging. It's also worth mentioning mixed-use properties, which combine any of the above. For instance, a building with retail on the ground floor and apartments above. These properties can offer diverse income streams, but managing them can be a bit more complex. No matter what type of property you choose, the potential returns can be lucrative. But what exactly can you expect? Now, let's talk about the potential returns from real estate investing. One of the key attractions of real estate investing lies in its dual stream of potential returns. First, we have rental income. This is the monthly revenue you can earn by leasing out your property to tenants. But how much you can charge for rent hinges on various factors. The location of your property matters a lot. Properties in prime locations or near amenities like schools, hospitals, and transportation hubs often command higher rents. The condition of your property is also key. A well-maintained property can attract better tenants and higher rents. Second, we have appreciation. This is the increase in the property's value over time. It's like a slow and steady race, where the finish line could mean a hefty profit when you decide to sell. Similar to rental income, the value appreciation of your property can be influenced by its location, condition, and the trends in the real estate market. A property in a developing neighborhood or a city experiencing economic growth can appreciate in value faster. However, do remember, while real estate investing can offer attractive returns, it also comes with its risks and challenges. It's important to do your homework, understand the market, and make informed decisions. So are you ready to embark on your real estate investing journey? Investing in real estate might seem intimidating at first, but with the right knowledge and preparation, it can be a rewarding venture. We've covered the basics, the benefits, how to get started, the types of properties, and the potential returns. Each element is a crucial step on your path to success. Remember, every investment comes with risks, but with careful planning and smart decisions, you can turn real estate into a profitable investment. Good luck on your journey to becoming a real estate investor.